Here's the cover of the Wall Street Journal. Today is Monday, April 7th, and we see escalation on the tariff, the Trump tariffs, an additional 50% on China. And so, understandably, people are overall freaking out, not sure what to do from a variety of perspectives, not just what do they do with their portfolio holdings, but what do they do in terms of household expenditure and how do we think clearly through this? So I have to appreciate Jason Swig, a longtime contributor to the Wall Street Journal, has an article I'm going to jump to now. I thought was quite helpful. And what he talks about is the idea to think clearly. So he's saying thinking clearly right now is harder, but more important than ever. And this is really critical for fearful situations where we don't really know what to do, feel uncertain, and want to act. We have action bias. So I just want to point out a couple things about this article and show you something fascinating that we're doing at Prof of Wall Street that's designed specifically for these panic situations. It allows us to stay invested, clear thinking, and successful over the long period. And this article, as I said, I really appreciate because he talks a bit about the how intense uncertainty triggers fear and stress in the human brain. So he's talking about glucocorticoids, stress hormones that make it difficult to make rational decisions. A lot of interesting research on this in neuroeconomics. What makes it really hard is chronic stress. That makes it tough to make rational decisions as stress is chronic. We saw this after '08. But he goes on to talk not just about the stress that goes along with it and trying to put some perspective around the market, also talks about the kinds of mistakes that people make. And he talks about this a bit later on in the article, where he talks about these sort of three layers of mistakes that we can make. And one of them he talks about is one that's just like not regrettable. You're going to reduce expenditures and make sort of rational decisions. The second one is a bit more regrettable, and the third being the most regrettable, which is going to be like panic selling. And that's exactly what Prof of Wall Street was designed for these sort of panic situations when situations get really tough. So I'm going to flip over to actually my account at Prof of Wall Street and show you an example of what that would look like. So if I, for example, am freaking out and I want to panic sell, let's say the S&P. So let's say I hold an ETF. Let's say I hold this particular one is trading about 127. And I want to sell, we can see there's other options. There's also, you can hold the asset, but let's say I'm feeling quite uncomfortable and I'm going to do an aggressive market order and I'm going to sell, let's say I have 100 shares of this. So this is the problem with general order entry, is that when you feel something, it typically tends to just lead directly to action. And emotion is not a trade signal. I can't say that often enough. So at Prof of Wall Street, what we do is we start the process with the intention. And then what we do is we ask you, the investor, to articulate what it is you're thinking. So you could say, well, maybe you're profit taking, you need cash, you're trying to reduce taxes, whatever it is, that we try to help people with the drop down. But you might just say, I'm freaking out about tariffs, da 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 da. And you could write exactly as long as you want. You could write the information source, let's say it's Wall Street Journal. And you could have these as lengthy as you want. Now, this allows you to have a very clear history about why you're selling, what you're selling. But it doesn't end there. We go next. We say, what's your emotional state? So you could say that you say you're fearful, you're uncertain, you could be angry, whatever it is. And what we try to get a sense for is what are the emotions driving the decision? At the very end of it, there's a summary. It displays back to what you just said, your emotions, your thesis, and then you confirm the decision. It goes into your history. So at present, this is a trade journal. It's a parallel entry that is designed specifically as a version 1 behavioral fintech to slow people's decision-making down, reduce panic selling, and increase the likelihood of good decisions. And this goes back to Jason's point about these sort of regrettable, irreversible decisions, where if you panic sell your entire portfolio, like a lot of people do during crisis, it's very difficult to come back, and some people don't come back just because they're burned. And so this is the very beginning of something quite fascinating, of changing the way that we invest and being able to deal with front page news that's quite uncomfortable, quite terrifying, taking even helpful articles about it and being able to turn it actually into action that saves you significant mistakes that you could make, because a lot of people are selling here. And sure, we don't know the future, but historically speaking, selling ETFs after a panic is not a good thing to do. So thanks for checking out a very basic demo of the Prof of Wall Street behavioral fintech. And hopefully as investors, we can stay invested for the long term and think rationally and clearly, no matter how stressful it gets. Talk to you soon.
Like and subscribe.